record on this computer. Okay, so that one is sorted now also. Now, gentlemen and some ladies whom I see logged in. As usual, gentlemen, don't move alone. I see some ladies logged in. Just a little background of this whole thing, our weekly Chiganiro. You all know, I'm sure, how it started. We used to do those drink ups where Hans and Isha would buy us free beer. And we held several of them. You remember Kololo Gardens, Panamera, Bugolovi. And I think the winner was Bugolovi, that drink up we had in Bugolovi. Because if I remember well, it is after that Bugolovi drink up that we were able to mobilize 40 OBs who went ahead and formed an investment club, which 2 years down the road, I'm told it's among the top 10 investment clubs in Uganda. The registered investment clubs, not circles, not companies, not savings clubs, but investment clubs. And fast forward, we went ahead and found ourselves into COVID lockdown. And after many months of lockdown, we decided to begin learning, because learning doesn't end anyway. So 4 weeks ago, we began these weekly topical discussions. The first 2 weeks, we handled COVID, home-based care, rumor mongering, social media, how to listen to which news, from where, immunizations, vaccines, etc., etc. And we concluded COVID by someone confirming that is going to have a piece of each and every vaccine that lands into the country, to be sure, just in case. Today is the fourth session, and we want to look at, well, the third session was last week. We looked at business startups, identification of which businesses you can do, financing businesses, HR positioning, marketing, sales, and business sustainability. That session, I think, was well handled by one of us, Hans Musingzi, and we concluded that he earned himself an honorary doctorate. So now we can comfortably say Dr. Hans Musingzi. Today's session, which is the fourth, marks 1 month since we began, and we are going to discuss something called financial markets, financial investments. We want to know what are these markets, where are they found, how do we participate in these markets? And someone tipped us that when we talk of financial markets, we are talking of treasury bills, treasury bonds, fixed deposits, unit trusts, shares, and all stocks, etc., etc. There are those things which always confuse us. We don't know how to participate. Even some of us who went to school and tried to study them, we realized most of the lecturers were not conversant with them, and they would only teach them when it's raining or when it's on a bad day. That's when they will teach them, so that we don't get to know the details of them. And we this time brought in an expert, Mr. Daniel Opiyo. I don't know whether he is also a doctor, but we shall get to know. Daniel Opiyo works with UAP Insurance. He's one of the top guys there, but he will give us the details regarding him. And among the things why we decided to go for this topic is because of this latest development, that NSSF is going to pay some of us, some of you, Iwaka money. I'm sure most people want to withdraw that money, and we don't know where it is headed to. But most probably, maybe you may realize that you can pick it and and go and buy a treasury bond. But we shall get to know the details after his presentation. As usual, I always make special recognitions of people, our OBs and non-OBs, who keep attending these sessions and have not missed. Starting with those who have titles, the doctors and engineers, and ending with those like us who don't have titles, but it's okay, life goes on. One day we shall also have titles. I see Dr. Alex Muganzi, I see Dr. Stephen Kusasira, I see Dr. Alan Mpaire. Of course, those are the ones I know of head. I see, and of course we have our teachers, current serving teachers at the school, Abraham, our pastor, and of course, you know, you're going to pray after the session, not at the beginning. We have teacher Amon, the chemist, the one in charge of COVID. We had our vice chairman, NSOBA Association, Apollo Kashanku. Dr. Arthur Imsuba, I didn't miss you out. And we have visitors today. I know we have many visitors. I see Daisy, I see Daphne, I see, oh, okay. I see Jacqueline, I see Imran. I know you're not our OB. Thanks for joining. And others who are going to join. Now, without wasting more of your time, because I've already wasted it and I apologize for that. Bruce, I'm also making you a co-host, and please make sure you also do a recording just in case. I'm going to invite Dan Opiyo to take over for the next 30 or 40 minutes, after which we shall open up and we have our usual discussions. Thank you very much once again. Those who have questions, you keep posting them on the chat room or chat side so that I can keep pick them and then we discuss them at once. Dan, please, you can do your thing.
Thank you so much, Chairman. As I said, I'm called Daniel Opiyo. I work with UAP Old Mutual Financial Services, which is a subsidiary of the Old Mutual group of companies. Old Mutual bought majority shares of UAP in 2015, and now we are UAP Old Mutual. And today, the subsidiary that I work for, UAP Financial Services, has got licenses from 2 regulators, CMA and UBRA, to offer services of fund management, stock brokerage, investment advisory, and unit trust. So when Huntington approached me during the week, he told me that you guys have a group that you want to know more about some of the securities in the market and also take advantage of it. And I decided to put aside a few things that we will be looking at as we go on. Securities are categorized in two elements: fixed income securities and equities. And they are mainly instruments where either government borrows money from the public, or commercial banks borrow money from the public, or even companies borrow money from the public. Commercial banks borrow money through what we call fixed deposits. Government borrows through treasury bills and treasury bonds. Companies borrow through corporate papers or corporate bonds. But in a nutshell, they are mainly simple loans, where when maybe one person wants to raise money for a particular objective that they want to obtain, they can just issue a bond or bills as a government, or fixed deposit as a commercial bank. Maybe companies can also issue corporate papers or bonds or even equities in form of shares. We shall be looking in detail what most of all those things are. So the classification of treasury bills and treasury bonds, they are very simple. They are treasury bills and treasury bonds are government instruments. Government instruments where government borrows money from the public to either regulate the economy, or maybe because they want to get money for a particular objective. You cannot purchase treasury bills or bonds unless you're purchasing it through a commercial bank. You cannot go direct as an individual. So you go and you approach your commercial bank and you tell them that you want to participate in the bills and bonds that have been auctioned. And then the banks will now issue them to you. Treasury bills are 1 year. Those are 2 months, 3 months, 3 months, 6 months, and 1 year. Whereas the tenure for treasury bonds is 2 years, 5 years, 3 years, 5 years, 10 years, and 15-year bonds. And the minimum that you can use for investing in any of those assets is 100,000. For the bill, 100,000, for the bond also 100,000. For a fixed deposit, it depends mainly on the bank that you're going into. Most of these instruments are taxed on the interest. For treasury bills, which are short-term instruments, they charge 20% withholding tax, whereas for the bonds, the taxes vary in relation to the time period that you are going to be buying the bond for. For 5-year bonds and below, the tax is 20% of the interest, which is withholding tax. And then for 10-year plus bonds, the tax is 10%. For the fixed deposit, the withholding tax is 15%. As I said before, the dealers for all these categories are mainly commercial banks for the treasury bills and bonds. And then for the treasury bills also, you can also go to the stockbroker like UAP or crested stocks or equity stocks. They can also help you purchase the bonds through them. Fixed deposits are mainly financial instruments provided by banks, which provides investors with a high rate of interest. And a fixed deposit, the way it sounds, it's you're fixing your money for a particular period of time at a particular rate. And for this, you have no access to the money until the maturity of the time. All fixed deposits are usually 1 year and below. You can fix for a year, for 3 months, you can fix for 6 months, or for a year. The rate of return for the fixed deposit mainly depends on the banks that you are fixing with. Banks that do not really have liquidity issues cannot give you very good rates because they have money. And usually banks borrow money to lend. The main objective of a bank is to lend the money. So they're going to borrow from you at a small or little rate, and then they're going to lend it out at a higher rate. So banks that already have money, they're not going to give you very good rates. So for you to go and get a good rate in a bank like Stanbic Bank will not be very, very, very competitive. But if you go to a bank that if liquidity is not so good, these lower tier banks, they can give you money. They can give you very good rates because they need the money in order to lend it out. So these are some of the frequently asked questions about treasury bills and bonds. Many people, when they want to ask who can invest in treasury bills, you can invest as an individual, you can invest as a company, you can invest as an investment club. But all this for individuals, you must be above 18. And you can be a resident or a non-resident as well, either a national of Uganda or a non-national. What must I do to invest in T-bills? First and foremost, you must register through the Central Securities Depository System. This is issued by Bank of Uganda. And you can get this from any of your banks. All the banks have it. You can also get it from the stockbrokers. So you fill in that form so that your details are input in the Central Securities Depository System. And then with that, you can, whenever a bond or a bill has been issued through your bank, you can go and then you register and auction for it. So what is a Central Depository System? It's just an electronic system where they register investors, auctioning of government securities are done through that. Creation and storage of investors' details are done. When also you're redeeming your money, when you want your money, it's also paid through that same system as well. How can I know the terms of the treasury bond? It's public information. Bank of Uganda always publicizes the information through the newspaper, the website, or through exchange. Uganda Securities Exchange recently got a license to participate in the purchasing of bonds and bills because the traction at the USC was very low. Stocks, the investment in stocks was not really being taken by the country so highly. So they decided to get a license also so that they can also participate in the purchasing of bonds and bills. So everyone who purchases through a stockbroker, the primary dealer is Centenary Bank. So the USC has a deal that they work through with Centenary Bank. So Centenary Bank is the primary dealer of the Uganda Securities Exchange. Banks are the primary dealers in investments, in T-bills and bonds. When an issue has been done, banks will go and bid through using what you have applied through. So what the banks get, then you in the secondary market, you now go and purchase through that. How much do I need to invest in government bonds or bills? The minimum is 100,000. That's what you need, but you can put as much as possible depending on what Bank of Uganda has issued out. What if I need my money before the treasury bill or bond matures? You can sell your bill or bond to a commercial bank or any other treasury bond investor or contact over the securities market. You can do that before maturity. How will I receive my investments when the treasury bond matures? As I said before, everyone has to sign up through the Central Securities Depository System. With your details already input in the system, at maturity, Bank of Uganda sends all the people's money, transmits the proceeds of the bill to all the people that have invested through your commercial bank. How do you sign up for this? Of course, you complete a CSD account opening form, provide passport photo of yourself or your signatories if you're coming as a group, national ID for identification. You submit the completed forms to your bankers or to the USE. Then the CSD forms are available at Bank of Uganda headquarters, all Bank of Uganda currency centers, commercial banks, Uganda Securities Exchange, and also from the stock brokers. So that is just a small nutshell about investing in bonds. There are so many details that are involved in bond investments. Because of time, you can pick my number at the end of this presentation. We can talk in detail if you're interested. I'll be going now to talk about equities, which is another form of security. Equities, as it sounds, it's also an instrument where companies request for funds from the market. It can be requested through debt or through ownership. So for equities investments, it's mainly a share is a unit of ownership in a company. Some of you already have companies that you already own. And at the beginning, when you're setting up the company, you're supposed to state at what is the share value of the company. So it is a unit of ownership that represents an equal proportion of the company's capital. And the share entitles the shareholder to equal claim or profit in case of losses. Investing in equities it's a category that you must look into you must look at yourself as, let me say, long-term investment. Because usually companies in the long run perform really well, but in the short run, you find that there are always blips, ups and downs and all that. So when do you need to invest in shares? There are two categories or two areas where you can invest or purchase shares through. The first one is at the initial public offer. Initial public offer is when the company goes public for the first time. The last company that went public in Uganda was Cipla, Quality Chemicals. There's a rumor right now going around that MTN might be listing probably this year or maybe early next year, and also Airtel as well. So at the point when they are going public for the first time, usually there is that window when people go and purchase the shares of the company at the primary market. Primary market is at the IPO. There's a window of about 30 days when you go to your broker. There are quite many brokers in Uganda that you can go to. All of them will have usually the prospectus. The prospectus has detailed information about the stock of the company, let's say MTN. So you go and then you purchase the shares. Usually a share price can be, depending on the value of the company, it can be ranging like for Cipla, it was, if I remember very well, I think about 600 shillings at that time. So you can purchase as many shares as you want. The minimum you can start with is 100,000. Now, if you don't get the opportunity to purchase the shares at the IPO, you can still go and purchase at the secondary market. The secondary market is when you buy already listed on the exchange through an existing broker also, either like UAP or mutual brokerage services. One can make money in shares in two ways. Companies usually make profits, and companies always have dividend policies. And you can make, when a company makes profits, they pay out through dividends. Dividends is when the company has, of course, made profits. So different companies have different dividend policies. Some can pay twice a year, some pay once a year. So when you purchase with the aspect of dividend gains, you purchase the shares and you just wait. When the company makes profits, they give you your dividends. If the company makes losses, you don't earn any money. The second aspect is through appreciation in price. This is called capital gains. When through the performance of the companies, the monthly or year in performance of companies, you find that the share price, the value will either be going up or going down. So some people purchase and wait for the price of the capital of the share to go up. When it goes up, that's when they sell their shares. The best time to buy a share or a stock is when the company is performing poorly, because at that point the stock is at a very low price. The best time to sell is when it's appreciating at a high price. So many people actually usually rush for the IPO because they know that because of the demand of that stock, of that company, at right after the IPO, usually prices tend to go up. So people rush to buy at the IPO so that right after the IPO has ended, they sell when the price of the stock has gone up. The amount of income one earns from an investment in shares depends on many factors. One is how profitable the company is. If the company is very profitable, of course, the share price of that company is going to be really high. Right now, the stock that has the highest value is BAT. It's at 30,000 shillings per stock. So if you bought that stock when you were at its initial public offer, it was really done, I think, at about 500 shillings or something. I don't know. I don't really remember. But right now, it's really valued at a very high price. So also the dividends declared and also how many shares you have. So the more shares you have, of course, the more money you will be earning. These are the companies that are listed on the Uganda Securities Exchange. There are also companies that are cross-listed. Cross-listed means these are companies that are listed from Kenya. The ones that are listed in Uganda are Omeme, Stanbic, Bank of Baroda, DFCU, BAT, NIC, and Cipla. Those that are cross-listed into our USE that are from Kenya are also there. Centum, Equity Bank, Nation Media, KCB. And with all that, we can also help you purchase those companies. But before you purchase stocks in a company, you need to really, through your broker, you need to do a lot of research about the company that you're investing in. You need to look at the past performances of the companies before you purchase the stock to see how they are performing. You need to know about the management of the company. What kind of management do they use? You need to see the rate of attrition in the company. So those are the things that determine how the company is going to be performing. and how the stock also will help you achieve. What do you need to sign up in this? Of course, you need to first go and get Securities Central Depository account through your broker as well. Before you buy or sell shares, you need to complete the purchase order form through the broker as well. So these are some of the requirements that you need. As an individual, you need a passport photo, recent bank statement, and a national ID. For a corporate or an investment club like this one, you need slightly more details. Investing in stocks needs a bit of heart. You need, if you're someone who, if you purchase stocks, you're not going to be able to sleep at night, I advise you to go for the fixed income securities where you are guaranteed of your investments. And also investing in stocks, it's good if you're a young person, let's say 45 and below. There, at least you know that you can purchase your shares for dividends and acts as a retirement. Maybe when you're now in your 60s, 70s, you just be getting dividends from the companies. And also you need to look at the long term. Investing in shares needs looking at a long term. Long term meaning minimum of 5 years, because companies tend to perform in the long run. If you look at the performance of companies in the long run, usually it's a good performance. So the last thing that we shall be looking at is a collective investment scheme, which is a unit trust. If you've been following, we've been looking at, we look at two categories: fixed income securities, which are guaranteed investments, treasury bills, treasury bonds, and government and fixed deposits. Guaranteed investments where when you put your money at a particular rate, you're going to get your return plus the principal. The second option was equities market. Equities here, there's a bit of volatility. There's a possibility of losing your money depending on the purchase, depending on the performance of the companies, and there's a possibility of gaining even way more than what you purchased depending on the stock that you've purchased. Now, collective investment schemes are schemes that pool funds together from different investors, from investment clubs, circles, companies, NGOs, and which is a unit trust. Unit trust is a collective investment scheme, and it pools contributions from different investors with a common objective. And when we pool those funds together from all the different categories of investors, we then invest it in what I've been discussing earlier on. We invest it in treasury bills, we invest it in treasury bonds, we invest in fixed deposits, we also invest in equities, depending on the category of the unit trust that you've chosen to take. So when we collect the funds, we then invest it in those categories that I've mentioned. After a particular period of time, we get returns from those options, which we then bring to the people that entrusted us with their funds. Those are the investment clubs, the circles, the companies, and NGOs. So you can even come and invest for your child as well. So there are three types of unit trust that we have: the money market fund, the balanced fund, and the umbrella. The money market invests in short-term instruments. They invest in, if you choose the money market, we're going to invest your money in treasury bills. We're going to invest it in fixed deposits. If you choose the balanced fund, we shall put 30% of your fund in equities and then 70% in fixed income securities. Remember, fixed income securities are safe investments. Equities or stocks are slightly volatile. So to hedge against the possibility of total loss, we only put 30% of the fund in equities, and then the last 70% we put in fixed income securities. The umbrella invests in both short-term instruments and long-term fixed income securities. So with these three investments that I've talked about, two are purely safe, which because we invest in purely fixed income securities, and then one, which is the balanced fund, invests in both equities and fixed income securities. So the main objective of this is to obtain high level of current income while protecting the investor's capital to achieve a reasonable level of current income. The fund manager here, on a day-to-day basis, is negotiating for good rates with the different commercial banks to ensure that the return that comes to the fund, to the clients, is very competitive. So this is just a small snapshot to show how it works. We are as you see up there, it's a small group of people who come as an investment club or a company or an NGO, someone who works in a company and in a corporate company doesn't have time to go and begin doing a business, but you have money lying around in the bank doing nothing. We also pull that as well. You want to save for your child's education as well, or save for retirement. So all that, we pull all the pool of savings, we put it together, and then we purchase different securities in the market. These are the securities that I've talked about up there, the fixed income securities through the treasury bills and bonds, and also the fixed deposits and the equities. So the benefit of the unit trust, first and foremost, the rate is very competitive, averaging between 10.5 to about 11.5% per annum, depending on the category of investment or the unit trust that you've taken. Remember, everyone in the fund gets the same rate, irrespective of the amount of money that you have decided to invest. The minimum is 100,000, and we don't have a maximum. You can invest. We have clients who are investing billions of money as well. So it's upon us. We are tasked to ensure that the rate of return that we shall be giving to our clients is very competitive, so that someone who comes with even $1 billion shillings will find it very competitive, because someone with $1 billion shillings can easily go to a bank and get a very good fixed deposit. So now we are tasked to ensure that what rate are we giving the clients? Can someone coming with $1 billion find the rate very competitive? So we are always negotiating with the different commercial banks when we're making the placements to ensure that they give us very good rates. The interest in the unit trust compounds on a daily basis. What you earn today becomes part of the principal, which is used to earn you the next day's money. As the chairperson brought up at the beginning, that people are going to be getting their NSSF. This is a very good avenue where you can put that money, because also on top of it, there is flexibility. One can deposit or withdraw money at any time they feel they need to. The unit trust is not a fixed deposit, it's an open-ended deposit. Open-ended funds investment categories where clients can come in at will and also can withdraw money at will with zero withdrawal charges. When a client requests for their money, as UAP, we ensure that we send the funds between a day or two. I'm sure out of the 68 people that are currently listening in, there must be 3 or 4 people who are already experiencing the unit trust. And they can attest to the timelines that we have when a client withdraws money. We ensure that a customer gets their money within either the very same day or at most the next day of the request. Above all, the investment is tax exempted. Under the Income Tax Act, collective investment schemes are currently exempted from paying taxes. So even the categories of investments that we undertake with the commercial banks, they do not charge us taxes as well. We have an online system where you can log in and monitor your investment on a daily basis. On top of that, we send monthly statements to all our clients, which is very comprehensive. It shows you the different day-to-day interests that you've earned. The investment also has got very low risk, mainly because we are highly regulated by two regulators. The first one is CMA, the second one is Uganda Retirement Regulatory Authority. CMA requests every fund manager to have other players involved in the management of the fund. Because we are managing clients' funds, we cannot be the only players involved. Every fund manager has to have an auditor, has to have a trustee, and also the custodian. The custodian is the one who receives the funds when you deposit. The money is deposited in a custody account. A custody account is an account where the fund manager has no direct access to. It's only through investment instructions that money can leave that account, and the instructions come from the fund manager. The trustee, who is almost seen as the head of the whole unit trust business, is the one who oversees and ensures that what every party is doing is according to the trust deed. A trust deed is rules and regulations that are put in place to manage the transactions of the fund. So each and every day, whatever we undertake has to go through the trustee. And then the third other party is the auditor, and our auditor here is Ernst & Young. They audit the unit trust business as an entity. UAP as a company, we are audited by KPMG, but the unit trust itself, it's an independent investment or independent entity from the company, is audited by Ernst & Young. The custodian and the trustee here are Standard Chartered Bank. To show how flexible the unit trust is, you can channel your interest, because it's very flexible. We have many people who are retired, who bring their retirement benefits and pensions, and every month they request us to give them their interest on a monthly basis, and they leave the principal there. With this case also, maybe you can put a lump sum and you can use your interest to take care of other expenses. Let's say rent. We can say maybe you want to get a policy. It's another policy for your child, an insurance policy, or you want to get a comprehensive insurance. We can just use even only the interest to cater for some of those expenses. I decided to put up a few scenarios to help guide you or to see how this whole unit trust business works, beginning with 20 million, 15 million, and 100 million. So with the 20 million at an average rate of 10%, 10.7%, on a monthly basis, you'll be getting close to about 179,000 in the long run, giving you about 50 million, you'll be getting about 447, and at the end of the year, you have close to about 5 million. 400 million at the end of the year, you have about 11 million. So the beauty about the unit trust is most of us probably are working in companies and you have no time for doing a business that can generate you way more returns than the unit trust, but you have money lying around in an account doing nothing. You keep adding, it's in a savings account or it's a normal account. You keep losing money from bank charges and all that. This can be an avenue where you can start saving your money through, or maybe you have a plan that you want to undertake as an individual or as a group, but you do not want the money to be lying around doing nothing. This is also another good avenue that you can put the funds into. These are the requirements. For individuals, we just need 3 requirements: passport photo, a national ID, and a bank statement. The bank statement should be for the account where when you want your money, we shall be sending it to. And for corporate companies, NGOs, or investment clubs, we need a bit more requirements: 1 colored passport size photo, identification documents for the signatories, certificate of incorporation, bank statement, and a resolution to invest. A resolution is when you sit as a company or as a club, you've resolved to invest money with UAP. This resolution doesn't need to be certified through URSB. It can just be signed by a few members of the club. With that, that's what I had for you guys today. It's a very highlighted summary of the investment securities. In case there are any questions, or maybe in case you want to know more about the investments later in detail, you can get my number, but I can take a few questions right now. Thank you.
Thank you, Doctor. Thank you, Dan. The doctor will come after the second session. Now, thank you, Dan, once again.
You're welcome.
Someone sent in a quick question, and he was saying that because you kept on mentioning brokers, some people get worried when you mention that word broker. And I hope we're talking about professional brokers who are registered and licensed by the Capital Markets Authority and Bank of Uganda, etc. Not the ones who are used to when we're looking for.
Of course not. There are about I think about 7 brokers in Uganda: UAP, equity, stock, Baroda, there is Crested Stock, SBG, Standing Bank. Yeah, those are the brokers that are there that you can use for these investments. Yeah.
Okay, thank you. Okay, fine. Members, I didn't see any other questions on the other side, but my take from this presentation is that just a quick one. So for treasury bills and bonds, other than the science and the technical language around the treasury bills and bonds, I walk into a commercial bank or a broker and they say I have my 100 million and I'll get sorted. For unit trust, what I've learned is that I earn my interest on a daily basis. Unlike the fixed deposit where I have to earn the interest only at maturity. And I think these are the things which have been missing out because, well, I and my colleagues have an account on a unit trust basis with UAP, and I think we are not complaining so far, so good. Now, the next question which I got was people asking, are we able to share the presentation from Dan? Yes, I assure you we shall share it after this session on the usual social media channels. And also the recording is already shared. So the question I have here is, why are treasury bills offered only through commercial banks? Are there specific reasons why are they offered only through commercial banks? The next question I have is, Dan, I'll read like 4 or 5 questions, then you answer at once.
Okay.
The next question is, for treasury bills and bonds, is there a preference on investing through the bank or an insurance company? Would the terms be similar? I can repeat that. For treasury bills and bonds, is there a preference on investing through the bank or an insurance company? Would the terms be similar? The next question is, okay. Now, I'm going to ask members who have supplements or questions, 3 to 5 members. You unmute, so you put up your hand, and then we allow you to ask your question. Then Dan will answer at once. That will be round 1. Then we'll give a brief round 2. And by 7, in the next 15 minutes, we'll be through. Because remember, we have a second session, which is not recorded. Anyone with a question, with a supplement? Dr. Alan?
Thank you, Dixon, and thank you, Opiyo, for the very elaborate presentation. I'm just concerned about the 10%, the interest that, well, I'm not concerned, but I was wondering, is it, you mentioned somewhere, you said it's competitive and it's negotiable. I hope I got you right. But what I was asking is it, can someone get a rate higher than that? Because it seems to have stagnated around that for a couple of years, and it's also similar in other brokers that deal with similar things. So I was wondering, is it part of the regulation? Is it can for example UAP give a higher rate, say at 15, as compared to other brokers that I would not want to mention here? Just to clarify that, or it's cast in stone that it's about that for this financial year. Thank you.
Darlington Ruhinda. Thank you, Dr. Darlington.
Thank you for the presentation. Mine is a small question in regards to the interest that they have been offering in the last few months. Why have the figures been coming down a bit? I mean, we're in an umbrella with a certain group that I'm in, and our interests have, if you receive, say, 200 this month, okay, in the last month, then you find the following month it is a bit less than that. I don't know if Daniel could touch on that a bit. I don't know whether it's clear or not in my question. Thank you.
Yeah, thank you, Darrington. And maybe Dan, I can also raise this. I think last week or 2 weeks ago, somehow your interest rates shot up by a big percentage. I don't know what had gone right. Next person we have is, okay, there's a question here for securities. When I have, I've forgotten SCD, but it's an account which you open with a bank in order to access treasury bills and bonds. For securities, when I have SCD, do I walk in with my money to buy shares like in Umeme? I can repeat that. For securities, when I have an SCD, do I walk in with my money to buy shares like in Umeme? Do we have another hand up? Or anyone who wants to ask? And if there's no one asking, have you guys seen what Dan has shared? Oh, it's only me seeing. Dan, please, you can answer those.
Okay.
You mean the lady or?
Okay, beginning with the first question, why T-bills are offered by banks? T-bills are offered, T-bills and, okay, investments in the government securities are offered by both commercial banks and securities brokers. As I said in the presentation, before it was only done by commercial banks, but because of the low traction in the securities market, securities means shares, the Securities Exchange decided also to go and get a license to also interest clients to go and buy shares through the Uganda Securities Exchange. So the Uganda Securities Exchange has got also a number of potential clients who invest in shares. So the brokers are trying to tap into that area to entice clients who are dormant in the securities market to also participate in the government securities. I don't know if that answers the question. So there are actually two categories. There are commercial banks and the Uganda Securities Exchange. So the primary market is mainly participated by the commercial banks, and then everyone else purchases in the secondary market through the commercial banks and also through the Uganda Securities Exchange. The second question was, is there a preference why the industry uses banks and brokers or brokers? Okay, why do we use banks over brokers? There is really no preference or reason why, but different categories or different institutions have got different clientele. So the reason being is there are people who might not get as much information from their banks because they hardly go to the banks in general, or even hardly log into the bank account, bank websites to see information. But most times you are going to log into to call your broker to see, which stocks are there, because brokers are always sending information on a day-to-day basis about the different stocks. So you find that there will be an opportunity there for investors to tap into the clients who are currently in the securities market to also purchase the different bills and bonds. Then Alan asked a reason, why is it that can unit trusts be negotiated? Is it negotiable? No. Unit trust rates cannot be negotiated. Unit trusts are open-ended investments. Open-ended investments do not give fixed rates. Fixed rates are given by commercial banks through a fixed deposit. Open-ended investments like unit trusts, where access is there by the client, cannot give a fixed rate because it's open. They might give you a fixed rate right now and then you come and you move the money. But usually the reason why banks give fixed rates is because they want to tie you for a particular period of time as they go and lend that money before you come for the money. You see, that's why fixed rates are given by commercial banks. But with the unit trust, where there is access to the money as and when, it cannot give a fixed rate. And also, going into the second question, why there is always fluctuation in the interest, or why the rate has been stagnant like that. The unit trust rates are a mirror of the economy, how the economy is running. Because when we collect money from you, first and foremost, 60% of the entire fund has to be invested in Bank of Uganda through treasury bills and bonds for safety. So then, right now we are managing close to about 426 billion. Of the 426 billion, 60% of it is in treasury bills and bonds for safety of clients' funds. Now, the rate that we get from the treasury bills and bonds is what we shall give to the clients. So all of them will not be the same rate as well. So it's a mirror of what happens in the economy. 30% of the entire fund has to be invested in commercial banks. So we are spreading the risks. Of the 30% that is invested in commercial banks, one bank takes a maximum of 5%. And as you know, different banks have different liquidity levels. So all of them cannot give you the same rate. Yesterday, I saw an extract in the paper that banks are sitting with about 1 trillion to lend, but there are no people to go and borrow the money because people are fearing because of the COVID. That means it's also going to affect us. That means banks will not really want money from us the way they wanted it probably before. So they're not going to give us a very competitive rate when we go to buy the bills and bonds. I don't know if that answers the question. And then there was a question by Darling, why have the figures been coming down? I think I've answered that. Dixon in Sime said why is that it went up a bit last week. There must have been a maturity at that time, or a placement, sorry, that we're making at that time. That's why the rate went up there. Someone asked, if I have my money, do I walk in to buy shares like in Omeme? You don't walk into Omeme as a company to buy the shares. You go to a stockbroker who is listed and has got a license to help you purchase the shares of Omeme. You don't go into Omeme, to the company Omeme. You go to a stockbroker to buy the shares. Thank you. I think, are there any other questions?
Yes, I have another question.
Yes. Questions?
Mine is, you can hear me?
Yeah, we can hear you, Darlington.
Yes, mine is about inflation. For example, if I have cash of say 20 million today, and I put it in UAP, and of course, inflation and the like, 10 years from today, the money that UAP pays out after 10 years, does it probably incorporate inflation in the sense of like the money I've paid in today, its value will not be more than what I get 10 years from today? I don't know if the question is clear.
Yeah, it is. It's very clear. Unless you are taking out the interest. If you're taking out the interest, of course, in 20 years, the value of the money will be way, because it will have been eroded by inflation. But if you leave the money being reinvested, the considerations are put in place for the inflation. Your value will still will be okay at that time, unless you are withdrawing. For those who withdraw their money on a monthly basis, the value for their money the inflation will erode the value of the money in the long run.
Okay, thank you. Thank you, Dan. We're going to do another round of questions, and that will be the last round. There's one here. As investors, how do we guarantee profitability after, say, 5 years? Because if it's as per day's rate, I think this is about the unit trusts. What if tomorrow it turns out to be in negatives? Is negative rate, negative interest rate? Is there a fixed minimum interest rate beyond which I hope you get it. Next question. Please, you can put up your hand and even without putting up your hand, unmute, ask your question, and then we have Dr. Dan to attend to them. So
maybe I can answer this as we wait for the next question.
Let me just put across this question.
Yes, Peter.
Yeah, just to clarify, because for bills and bonds, you can invest through a commercial bank, but you can also invest through a broker like UAP. So the question is, am I guaranteed if I go to either to get the same terms, or is it the case that perhaps I would get better terms with a commercial bank compared to a broker or vice versa? Thank you.
And I also add this, Dan, I'm also adding this. If I go through a stockbroker, okay, through a broker, how much do I pay him in terms of, I guess, a commission, like any other broker? Can we have another 1, 2, 3 questions? As I also ask this question, that for treasury bills and treasury bonds, since we're buying from Bank of Uganda, and my broker is also buying from, is also getting me to Bank of Uganda, is there any reason why I should go through a broker, or I should just walk straight into a commercial bank? What are the benefits of using a broker, of using a broker? Can we have another 1, 2, 3 questions? Just unmute and ask. Okay. Dan, you can take us through those 3 questions.
Yes, the first question being, as an investor, how do I guarantee profitability after 5 years? Because if it's as per day's rate, what if tomorrow it turns out to be negative returns? Now, as I said, we don't guarantee rates, and the rates mirror what is happening in the economy. I had mentioned earlier on that the interest compounds. What you earn today becomes part of the principal. So there is no way your principal will be eroded on a day-to-day basis. It's a rate that will keep changing depending on the market variation. If each and every month you keep seeing the rate of return going down and down and down, you have the liberty to remove the money and probably take it somewhere else. But as I said, the investment in the unit trust usually mirrors what's happening in the economy. If, let's say, we are giving you 10% or 11%, 11%, there's a possibility that if you remove your money and you want to go and do a similar kind of investment, which is in fixed income securities, let's say a fixed deposit, there's a possibility that you might get even a lower return than that. There's a possibility. So the investment in the unit trust, the compounding interest usually helps to hedge against, in case you feel like as if your principal is going to be eroded. It will not be eroded, because each and every day, the principal becomes part of, the interest becomes part of the interest. And then Peter had said, can you get better terms in bills through a bank than through a broker? No, you cannot get, because depending on the negotiation that your bank has done with Bank of Uganda, let's say if a bond has been issued at a particular rate and your banker goes and bids and has the ability to be able to negotiate with Bank of Uganda at a higher rate, that means you'll be able to get good rates. It now depends on, because different banks, all the banks are primary dealers. It depends on the number of bids that the bank has received from the different individuals who want to invest in the bond or the bill. If the bids are many, that means that bank as a primary dealer has got a very good negotiating power when it goes to Bank of Uganda. So it can negotiate a good rate. As I said, the brokers, which is all the brokers go and bid through the Uganda Securities Exchange. The primary dealer for Uganda Securities Exchange is Centenary Bank. So if you're to purchase through a broker, that means your primary dealer is going to be Centenary Bank. If you're to purchase through an Extanchat, you'll be the secondary investor. The primary dealer will be Standard Bank. So the ability of your primary dealer to negotiate with Bank of Uganda determines determines the outcome of your bid at that time. I think that also answers the question that I think Dixon had said. So why should I go through a broker? Because I think all of them were around there. Why should I go through a broker and not through a commercial bank? As I said, I can still retaliate. Brokers, which is the Uganda, we all fall under Uganda Securities Exchange, and the Uganda Securities Exchange, its main dealer is Centenary Bank.
Mr. Moderator, can I ask any question?
You can see a question there from CPA Collins Kansime. What are the key risks that I could possibly look out for as I invest in the different securities? Which one of these are high risk, but with profitable levels? Fixed income securities as it turns. You're going to go and invest your money and get a return at a fixed rate. Whereas equities, there is a bit of volatility, possible volatility in the equities. So investing in equities, you look at the long term. Investing in fixed income securities, both short term and long term, you can get returns. So with that, you can really see where you feel you can lie. Equities are a bit more risky because of the volatility in the companies. You might not really know how the performance of the companies have been. The shares market in Uganda has been very dormant. That's why most brokers in Uganda prefer or like investing from the cross-listed companies. That is, some of them that are coming from Kenya, because the securities market in Kenya is a bit more dominant than Uganda. So then I can see, are there any circumstances where an investor can get less money than the principal invested, especially in the treasury bills? No, because it's guaranteed. You cannot get less than what you've invested. A fixed investment, you go to a bank. The bank tells you that we're going to give you this return after this period of time. So you leave your money there for, let's say, 6 months, 1 year, and then you go and get that money. So there's no circumstance where an investor can get less.
Okay, Dan, there's another question here that why is it that there's a lot of discussion around treasury bills and treasury bonds currently, and then this one goes ahead to say that the current rates are between 10 to 15% for treasury bonds and I think 17% for the 15-year plus bonds. Does it mean that as more and more people join this market, the interest rates will come down? Like, is it a competitive market where once you have more people selling, then the prices or the interest rates go down? Then there's another question. I think this will be the last one. Information. Oh, okay. This is, I think, supplements from Sequoia. Government securities are also used as collateral in commercial banks. Yes, yeah. Treasury bonds can actually be used as a collateral in a commercial bank. I'm going to request Dan to. I've been sure your network is not so clear. You'll forgive us, but I think you can post your question. Let me request Dan to wind up as he answers those 2-3 questions and any other information he may want to give us, including the phone number of yours and and the other bird, of course. You'll understand what.
Good enough. I've just posted my question on the chat group.
Oh, Bin Sul has finally posted his question. I don't see it. I've been Sol. Okay. That question was answered. The one about guaranteeing profitability after say 5 years. It was answered.
Yes, but yes, it was answered. But now the literally as a layman's, because the unit trust does not guarantee the profitability even after in the next coming 6 years, because it goes as per the economy. But the treasury bonds and the bills with the Bank of Uganda, we all know that they are a bit fixed. So as a layman, if say I'm saving 30 million in treasury bills vis-a-vis the unit trust, maybe if you can give us a kind of a bit of a little explanation that if I invest with the treasury bonds and the bills with the Bank of Uganda, this will be the margin and this will be the taxes and it's guaranteed. But now you bring in the unit trust, you say that per this month, you're trading at, it may be 10.75%, and of which next year, you're not guaranteed. Because we normally go by the wave of the profitability trap. As the lay people, can you maybe enlighten us more? Because as the lay people normally go particularly by the profitability trap. Kaliwa kafuna mangu.
Okay, thank you, Abin Sol. Thank you, Abin Sol. Meaning you want an analysis giving the comparison between the different investment vehicles or investment options, which I'm going to request Dan during his free time after today's session. You'll do a column by column analysis for us of that, given this 10% for treasury bills, given this 10% for unit trusts, at the end of say 2 years, this is how it would be. And given this investment in Umeme at the current rate, this is what it would be. Dan, I'm sorry, I should have warned you that you should expect such questions, because these guys normally ask the real questions. Dan,
no problem.
I'm going to request you to do a wind up, and then whatever you want to mention, you can mention it, and then for us we'll proceed. Thank you.
Okay, just to give a high-level comparison between unit trust and government securities, it's mainly, or fixed deposit, it's mainly your objective. One is open-ended with access to the money whenever you want. One is fixed. You cannot access the money for a particular period of time. So you can do diversification. You can put some in an open-ended investment where you can access the money for your day-to-day activities. One is taxed 15% or 20%, depending on the type of security. The unit trust is not taxed at all. Government securities or fixed deposits, it's the amount of money and duration of fixing that determines the rate that you get Whereas the unit trust, it's open-ended, there is no minimum, and yet you're getting a very competitive rate in the market. If there's anyone who works in the bank among us, this forum, to get a rate of 10% in the market or for a fixed deposit, you should be having close to about probably 250 million plus. And I'm talking about a net return of 10% to invest to get a fixed deposit. You should be having close to about 250 million or 300 million, which is not the case for a unit trust business. The unit trust, irrespective of the amount of money you have, everyone gets the same rate because of the aspect of numbers. Where we're investing it, we're taking as a pool. We're investing in different asset classes, different investment vehicles, which the average rate of return from all those options give us a very competitive rate as well. There's someone who asked, the more that some asked, if I may just paraphrase it, there are different rates that are coming, the bills and bonds. Is it the demand that determines the rate that comes in for the bills and bonds? Now, there are very many reasons why Bank of Uganda issues out bills and bonds. One of the main reasons is to regulate the economy. Bank of Uganda is the main regulator of the economy. So they usually borrow money from the public to regulate the economy. So the effect of demand and supply will not really determine the rate. It's the main rate of what? The main reason why Bank of Uganda is issuing out the bonds. But the negotiating power of your primary dealer will determine the rate that Bank of Uganda will give at that auction. But the primary reason that Bank of Uganda issues out bills and bonds is mainly to regulate the economy. So with that, I would like to thank you guys for this forum. I'll be sharing this information with you guys through hands. And look at these investment vehicles as an avenue where you can tap into to get some little bit of income. My advice would be for you guys to diversify. Look at investing in equities. No, in what? In equity, sorry, in equities, in fixed income securities, those are treasury bills and bonds. But just do an analysis. Look at your reason, the main reason why you want to invest. Will you need the money in the short term? Will you need the money in the long term? Are you going to invest? Are you saving for a particular objective, maybe for your child's education or for a piece of land that you want to buy in the near term? So those are the things that should determine where you're going to place your funds. You can place long-term funds, long-term investments give long-term returns. Short-term give less returns. With this, I would like to thank you guys for this opportunity, and you have my number in case you need anything or detailed information. I'll be able to receive the phone calls.
Thank you, Dr. Opiyo. I want to, on a special note, I want to recognize the following. I'm just going to go through the list of participants. Barbara, Betty, Daisy, Daphne, Jackie, Jacqueline, Margaret, and Rose Athieno. Thank you very much for attending our sessions. I used those.
What about Mark?
I used the feminine names because I'm assured that those ones did not go through NTARE unless they went through as teachers or the non-teaching staff. Now, we are going to stop our official session here, as we always do. We are a bit 10 minutes late. Next week, we're going to look at the real estate sector. Last week, there were many questions around real estate, about land banking, about rental houses, apartments, mizigos, toninyira, lodges, guest houses, commercial buildings, and all sorts of things that make up real estate. So we're going to get an expert into the real estate to take us through what goes in there. And the following weeks, we're going to look at agriculture, we're going to look at agribusiness, agro processing. We're going to look at forestry or agroforestry, whatever it is called. and life goes on until COVID is over. We're going to do this every Saturday until COVID is gone. Now, I want to request Kashanku Apollo has disappeared. He's our chairman, vice chairman in NSOBA, but he has gone. He has missed that opportunity. Abraham, I know you're there. Can you give us a closing prayer so that we end this session? And those who are still around, you know we are still around. Abraham?
Yeah.
Please pray for
Lord,
us, and then we proceed with our... Good.
can we humble ourselves and have a word of prayer? Lord, we thank you for this day. We thank you for this session. We thank you that you've managed to give us this time. You've managed to bring us together to deliberate on issues that we feel will take us to another level. We thank you for the wisdom. We thank you for the sharing. Different people that you always bring for us, Lord, to help us. Lord, we pray that you continue protecting us from this scourge of COVID and give us the continue giving us the health, the good time, the resources, so that we can continue discussing, we can continue with our lives, and we continue looking after our people. Lord, pray that you open our hearts, open our minds to keep on knowing that you are Father, you are everything that we do. We thank you, bless you. In Jesus' name we pray.
Amen.
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 Thanks, guys. I saw Darrington, you are asking that is there the session is open. It's now open session. Darrington, you are asking if there is a WhatsApp group for this development. No, but I know you belong to many WhatsApp groups. Maybe I should ask, are you a NOBI of NTARE? Because we share this information in many groups for NTARE school OBs.
For us on our group, we received it late.
Okay.
Yeah,
My name
I'm on Chisianga group.
My name is Colin Kansime.
Yes, Collins.
Yeah, we received it at exactly 6:30, and it was starting at 6 exactly. So we missed almost 30 minutes.
Oh, sorry. I apologize for that. Bruce,
Okay.
that means Bruce should be slaughtered.
Yes.
Bruce, yeah, that is purely Bruce's mistake. I know he's listening. Please always share with all the other groups, especially
that's class 98, 92, 98.
Yeah, please, Bruce, take note. Darrington,
I received the invitation on our Chisianga group. That is 206 to 2011. But now I was wondering on the follow-up now. Now they're saying they're going to send the slides and what. So I was wondering on the follow-up how that information will disseminate to other individuals who are at least present.
okay, Bruce is here, he's listening, and he knows how he's going to handle that. It is simple. Bruce, you share with, is it Seth from the Lions League? From the Lions League, I think. And then it will be sorted. And then it will be sorted. There's feedback. Someone is using.
Nsime, can I make a suggestion?
Yes.
Nsime, can I make a suggestion?
Yes, Senior.
Yes. Yeah. Could all those other groups where Bruce is not a member, could the admins of those groups add Bruce so that he is constantly feeding them information and not through a third party?
Yes, Senior, that advice is taken. I had assumed that Bruce was a member of all those groups, him being the PRO and an alumni coordinator. I had assumed that he's a member of all those groups, So Bruce, you're listening?
Yeah, but it's now coming out that he's not a member of some groups.
Exactly.
And this is to their disadvantage.
It is a big disadvantage. So Bruce, look out for those groups and make sure you are a member to those groups. Dr. Bukara, what are you saying? Doctor, you've kept quiet.
Oh yeah, I'm sorry.
Dixon, I've shared the presentation on the group on this platform.
Okay, yeah, we have seen it.
Yes.
Thank you.
I beg to leave. Is that okay?
Yeah, please do.
Okay, thank you so much.
Okay, can also need to save it here. Alan Agaba, is it the Alan Agaba, you know? Alan Agaba, are you there?
Which one do you know?
Alan, my planner.
No.
Okay, this is engineer Alan Agaba now.
Yes.
Not from Rampara.
No, not from Rampara.
Now you can see how marketable Rampara is. It talks for itself. Jackie is asking us, some of us are not on those groups. Now Jackie, what do I do? You want the presentations? But you can download the presentation. It's there on the chat side. I've downloaded it. How else do I share with Jackie? I don't know how else to share with her because, okay. Amaraho wants help me with your contact. My contact is this. Amaraho, whose contact? You want for Daniel Opiyo? Daniel Opiyo has already shared it. If you try to scroll up, if it is mine, mine is everywhere. So what I will do, I've sent you an email to what you have given, and then we'll see. You contact me from there. We're still open for the next 10 to 15 minutes. Amon, today you're quiet because Teacher Amon, you have no data or you have issues of COVID.
Amon is shy. You mentioned some non-OBs of the fair sex, so Amon is shy.
Non-OBs. Okay. He has done. Yes.
No, I just thank you once again and Bruce for these Bigani Roberta's. Some of these products are very good, and to instill a culture of saving into these young boys who are still growing up, especially like the young lions in school. Maybe Bruce, once in a while, I don't know if it's permissible, but once in a while, maybe the guys in school should get some of these talks. And if it's permissible, I'm sure if someone at any age can open an account with a trust fund, such that it becomes an avenue for them to start saving as early as possible. Because I know some of our kids have these boxes for saving. Some of them have, saving accounts in banks and that kind of thing. But I think it's also high time that we enlighten them and we interest them in opening up accounts with some of these products as a way, as a way forward. Because I realized it's a very good opportunity. And this presentation was very, very clear. Of all the presentations that I've had about these trust funds, this has been one of the most open and very succinct. So I want to thank you once again, but that's my suggestion. And maybe Bruce can think of it. But thank you.
Thank you, Alan, for your information. You know, some of these guys at school, they have more money from their parents, from us parents. They make more money from us than we make. There's that story of a boy at, was it Namiriango? The one who was into money lending at school, and he would even give to some teachers and some non-teaching staff. You can imagine, some guys have huge amounts of money at school. So if they were to invest in such investment vehicles, then they should be doing better by the time maybe they reach university or by the time they finish university. So Bruce, I think you can take that one on. Instead of just teaching commerce at O level and economics at A level, this could also be part of the general paper. They may bring a question about how government regulates the economy, and then none of them will give an answer. Bruce, I hope you noted on the chat site that you need to keep someone informed. Try to be innovative. I hope you saw that. Okay. Any other issues of concern? If not, then I think we can. But we're still 33. We normally close when we're remaining 30. So we can still push for another 5 minutes.
Yes, Bwanansime, thank you so much, Dixon, for the good work.
Thank you, Abraham.
Someone called Abraham here. Can you please make sure you link us up and we do some Abraham thing also? Can you? Thank you so much.
Oh, Arapu Ndiwa.
You see, some of these things, they never miss opportunities of that nature.
You're right, you're right.
Dixons are very few, my friend.
Winnie, thanks for attending the sessions. Winnie Kagoma, the mother to a lion in senior. Yeah, I love Ontari. That's what Winnie has said. I'm Winnie Kagoma, the mother to a lion in senior, though I didn't put the class. Thank you, Winnie, for attending. Now,
I think their son finished senior 4. I think it's mother to Arvis.
Okay. You even know, okay, yeah, because you're a teacher there. I should have also mentioned that we are not changing, we are still using the same link every Saturday. The link actually doesn't change. The ID doesn't change and the password doesn't change. So for those who are saying, how do we, just know that every Saturday, it will be the same link, it will be the same ID and the same password for now. Though we shall keep sharing. And we normally start sharing on Tuesday when we confirm with the presenters, and that's when the flyers start flying up and down. Bruce, are you there? Bruce, today I don't know what, is it a data issue? Bruce, can you close the session unofficially, because the official one has already been closed? Okay, Bruce doesn't have data also. Now, can we hear from Barbara as we close the session? Barbara, please help us close the session. Thank you. Someone logged in as Barbara. I hope my mentioning of names doesn't scare people. Can we hear from Daisy Karukuru and help us close the session, please? Kandecheraho kugamba mazina. I'll mention the last one. Jacqueline, please help us close the session and we go to enjoy our weekend. Wapi? Abraham, close the session and we go.
Thank you, everyone. God bless you. Have a nice weekend. Please join us in NTARE school service, Sunday service tomorrow. We are going to share the link in different groups and we worship together. Have a nice week. God bless you.
You too, Abraham. Bye for now. Nice weekend.
Thank you, Dixon. Thank you, Dixon.